Hello and welcome to Gurulkan Çakır's YouTube channel. Today's topic is income tax in Turkey. Income tax is levied on the income and earnings of real persons. As ordinary partnerships do not have legal personality apart from their partners under Turkish law, the partners are individually subject to income taxation on their share of the profits. Income taxpayers are divided into two subcategories under Turkish tax system: resident taxpayers and non-resident taxpayers. The liability of resident taxpayers is unlimited. They have to pay tax on their income regardless of being derived in Turkey or elsewhere. On the other hand, non-resident taxpayers are those who do not reside in Turkey but engage in an income-generating activity or own a property within Turkey. As a result, worldwide income of non-resident taxpayers are not subject to taxation, except for their income generated in Turkey. Capital gains, which are subject to income tax under normal conditions, enjoy a specific exemption under the current Turkish tax legislation. When the shares of a listed joint stock company are transferred, the capital gains made from such transfer are not subject to income tax. On the other hand, when a real person shareholder transfers the shares of a limited liability company, no matter how long such shares have been held, the capital gains made from such transfer are subject to income tax. It is permissible to deduct various expenses from the gross income when calculating the taxable income of an individual. There are many expense items that can be deducted from the gross incomes of the individuals. Moreover, income tax law recognizes the depreciation for the fixed assets as well. There are certain thresholds up to which the revenues and earnings of the individuals will not be subject to income tax. These thresholds are adjusted by the Ministry of Finance annually. Tax returns for income tax must be filed with the local tax office annually. The tax return for income tax is normally filed from March 1st to 25th in the following financial year. Individuals who engage in commercial activities are permitted to carry forward the losses for 5 years.